Hello, 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 everyone. Mike Arnold, though, I can't wear this shirt in front of a green screen. Oh no. Oh no. Well, let's get straight to it. We had the FOMC, you know, the 25 basis hike this afternoon, and then the press conference, which is a thing I said to watch out for, and that did not disappoint. I'm not going to waste anybody's time. We only have Bob for a little brief moment, so I am going to get him on here because that's what everybody wants to see. Bob Iacchino and his take on the FOMC press conference.
That shirt looks weird, man. You look like you have like your head's attached to some sort of explosion.
Well, it's because there's green on a tie dye in front of a green screen just doesn't work. So
That is
let's
good
get your
stuff.
take. I mean, we had the rip your face off rally. We're in negative gamma mode. I mean, especially the Nasdaq. Look at that, up 4%. I got to keep raising my retracement levels. My targets are all hit. What am I gonna do?
Not even to the top of the rotation zone yet, but that's not. Look, the Fed was optimistic. It was interesting because rates initially moved much higher. If you're watching rates, at one point we actually had every duration 2 year, 3 year, 5 year, 7 year, 20 year, 30 year, all above 2% at one point intraday today. And then they pulled back from those highs. Rates still finished higher, but not as high as they were. And that to me was likely why we got the continuation of this morning's rally. Um, that's basically why we ended up finishing, in my opinion, off the high. As bond yields came off their sort of intraday highs, um, growth tech, long duration stocks inverted, and that late sort of bond rally that caused the lower yields gave a little bit of a tailwind to NASDAQ. But I will say this. I almost hesitate to say it. I wouldn't say it anywhere else. I don't believe this is going to last. I really don't. I don't have a technical trade. I'm not telling you guys to short it. What I'm looking at on my phone here is screenshots I took of the summary of economic projections by the Fed. And this is Narnia. Like, this is Candyland, these two things. And I'll kind of read them off
Can
here.
you text that to me?
Yeah, I'll send them to you.
Well, then I can put
I'll
them
send them
up
to,
right, if you
yeah,
want.
I'll text them both right now. Okay, so then you can put them up, right?
I can
But
put
in
them.
the meantime, I'll read them. Um, Basically, for 2022, they expect 2.8% GDP, 3.5% unemployment, and PCE inflation at 4.3%, and the core at 4.1. Okay, yeah, put them stacked or side by side,
Yeah, I
either way.
will.
Um, okay, I mean, there's a rate of change effect, right? So meaning when you have inflation this high and it kind of tapers, it looks like it's improving dramatically because inflation readings are a number, right? So the CPI is at 200 and then it goes to 300, it's up 33%, right? So we get the plus or minus. That's what we're always looking at, is the plus or minus number. So 2022, 4.3%, 4.1% on two inflation readings, 2.8% GDP, and 3.5% unemployment. Remember, we're already in March. Okay, so we're going to have a substantial move for 2022 to finish at these levels. Now, let's look at 2023. They expect inflation to go down to 2.7 and 2.6% in 2023. I don't know about that. But if they're right, they expect GDP to stay at 2.2% and unemployment to stay flat. In other words, that kind of a slowdown in inflation won't affect the jobs market, according to the Fed. And then you look at 2024, right back in line with that adjusted average of slightly above 2%, and then 2% GDP, and unemployment only to go up a tick. That's Narnia, man. That is fantasy land. There's zero chance that all four of these things on the screen happen. Zero chance, in my opinion. I could be wrong, but they don't expect it to affect the real economy basically at all. At all. I don't buy it. That would mean that all of inflation is supply chain, in my opinion. And then when the supply chain settles, the economy stays strong, jobs are great, GDP stays, elevated ish. And I don't believe 100% of inflation is supply chain. I believe a decent chunk of inflation, I'm not going to put a percentage on it, is the stimulus checks. And it's the traditional Milton Friedman version of inflation. It's more money chasing fewer goods. Now, the supply chain definitely adds to the fewer goods part of that, but it doesn't add to the more money part of that. The stimulus checks did. And what the direct effect of that was, people were making money staying home. So they created businesses, A, and B, they decided their old job didn't pay them as much and they demanded more wages. I said this probably on one of the first live streams that I was on. You can cut certain parts of the inflation equation. You can't take raises back from people, not without affecting unemployment. The only way you take raises back from people is firing them or
laying them
cutting
off
them
and then
hours to a
rehiring
point
it,
where they quit. What's that?
laying them off and then rehiring somebody at a lower
Yeah,
rate.
rehiring somebody at a lower rate. You lay those people off, you try to rehire somebody at a lower rate. That means one of two things. Either you don't rehire those people at a lower rate, or those people are now taking jobs at a lower rate because jobs are more scarce. So that's a higher unemployment rate. So this is Narnia. It's Narnia. It's not going to happen. Silly. So I think this optimism was part of the rally here. And I think I'm going to call myself a smarter person. I think smarter people are going to realize that this is crap and isn't going to happen. And that optimism might fall. But I mean, I could be wrong. I don't have a short signal. I don't. I'm just saying these kind of rallies in what may amount to be a bear market can happen.
Yeah, well, we're also in, as I've talked about, which there was not a peep about it today besides some other people who really watch stuff. We're in, again, that negative gamma mode where
Yeah.
rallies just feed on themselves because you have to keep hedging. Like on this strong rally, it's what happened this afternoon too. It was hedging, had to keep buying into itself. Okay, so as stuff went higher, you had to buy more to hedge off your exposures. So it's a feeding frenzy, and that's literally what I saw. And then I talked to one person who said, "Well, this is this all this means is they'll maybe get two rate hikes in, and then they're going to have to cut and put in quantitative easing. So that's why we're buying everything across the board. That's why we're buying tech. That's why we're buying everything beaten down because they're going to only get May hikes in, and we're going into a recession." And I'm like, all right, you know what? I give up.
Yeah. I don't know how they get this inflation under control with what some of those causes of inflation are. I mean, we're just going to go into full on chip mode, back into oversupply of chips. I mean,
You,
even if the semiconductor chips start getting produced at a high rate again, right? And fuel costs, as we talked about, are what we're 97 today on crude oil. So those fuel costs are still inflated. So that means shipping is still inflated. Air shipping, ship shipping, truck shipping, and rail shipping still inflated from where they were at the beginning of the year.
and
I mean,
what you talked about, all right, wages, that's not going to be transitory nor supply chain.
right. Supply
Housing,
chain. I mean, I'm
housing.
agreeing with you on supply chain not being transitory because I think it's going to take 3 years to sort out, and that ain't transitory.
No, and you have stuff like housing. I was talking to a friend of mine last night in Phoenix area, and she said I literally, if I did, and she was in a rental, and she's luckily renting from a family member. She said if I had to go out and look at this point, I'm priced out of the rental market here. Because rents,
Mhm.
what I used to be able to pay 2,000 for, and her old place that she moved out of last summer, which she was paying 2,200 a month, is now the current ask is 3,500 a month.
Wow.
So she's like, I couldn't afford to rent here anymore, so I'd have to leave. So that's not transitory. You have a bunch of stuff that's just not transitory, and it can get entrenched. And so it's not just going to fall off.
And how about this? This is something that Christoph, oh, Mike is talking about Christoph right now. Christoph has brought to our attention about Ukraine and the wheat fertilizer.
Yep.
I mean, fertilizer prices are through the roof, and we're approaching the planting season for Ukraine. Are they going to be able to plant? It wouldn't seem like they would. And then you've got a fertilizer shortage, which could lead to a food shortage. What's the Fed going to do about that? About food inflation? Food inflation is obviously food and shelter. Mike just brought up shelter, are the two most crushing versions of inflation because there's no replacement for them. I mean, yeah, if chicken's going up, you can buy steak, but if fertilizer's going up, everything is going up.
And you have our here's a tweet from somebody I follow, or a retweet from somebody I follow. Our family farm fertilizer prices 2021 was 300K. All right, 2022 800,000. Big farm, okay, but 800,000. So that's what over 2.5 times.
Mm-hmm.
And like the gas prices before the big ramp up, they were paying 21K a month in the fall. Now that's going to be much higher for their spring planting and their harvesting season. So you're going to have this stuff not come out of the economy anytime soon. So it's going to get really interesting.
Yeah, I think one of the things that bothers me the most is the way the Fed is trying to spin it with those projections. I mean, at least when they're giving out those projections, they should say something like, this is what we hope to achieve. And just let everybody know that, like, this is best case scenario. This is what we're hoping for. We don't necessarily think, they have said that about the dot plots in the past, but they don't say it about the projections. And I think that's part of what may have driven the later part of this rally. And as Mike mentioned, the gamma issues.
So yeah, I don't have a sell signal. All this stuff is topping. When I told people I talked to today, they're like, "Well, should I take profits?" I said, trail a stop. It's all you can do at this point. Trail a stop. Could it keep getting juiced higher? Yeah, we have options expiration this Friday, and we're still in negative gamma mode. We are still in negative gamma mode, and this is where it really helps to follow stuff like this. Through you shift to zero gamma on the S&P at 44, roughly 4,400. So where are we now? We're 43.62. So could this, and I talked about this before, I was watching for it to run up, and possibly we haven't hit the trend line yet. And then above there is the 50-day exponential, this prior topping area, and 4,400. So could we easily see that in 2 more days? Yeah, easily in this. Now, once you start closing in on 4,400, your negative gamma starts dissipating and you get into positive gamma. So we then get into chop until option expiration, and then we'll have to see. But long term, this is just in my book, this is just a short term oversold induced rally. We were watching for it, and we've also talked about repeatedly, in this kind of environment, you'll get these rip your face off rallies.
Yep.
And you get these rip your face off rallies. Can I ask you a quick question about crude?
Yeah.
Because we had the inventory numbers come out, right? Earlier today, the inventory numbers.
Yep. Yeah.
And we had a build, and crude didn't really drop.
Well, I mean, it kind of did, right?
It kind of, but not. I mean, it didn't. It's held this key area right now. So we had some actually sort of bearish stuff from my perspective, and I'm looking at this 4-hour double bottom. Can it go lower? Yeah, but I mean, we had it dropped, pulled back a little, but nothing substantial in here. What's your any other takes on crude? Since you are the crude expert.
Yeah. So the inventory report, the weekly petroleum status report is the technical name for it, has not, I don't want to say it hasn't mattered, but it has not held the, what's the word? The status, for lack of a better word, than it has in the past, given geopolitics and given what's going on in terms of supply and demand curves. There's two things going on that are overarching to this. So number one, the most critical part of the EIA report to me was the refinery utilization got back above 90. So what does that say? Well, that says that refinery utilization represents demand, like demand on the ground here in the US. Because refinery utilization, it's the percentage of the refineries in operation, right? How much of the actual refineries that are operable are operating. Now, normally in a normal market, we're above 90. We've actually spent, I'm trying to look it up here really quick. This is the first number above 90 going all the way back to, quick check for me is August 27th. Otherwise, we've literally been below 90 that whole time. And that's been sort of a weak demand, a representation of weak demand. This is the first time back above 90. So I think the demand picture is getting slightly reinforced by the EIA today, as opposed to that draw. The EIA refinery utilization figure, in my time of watching crude oil, has the ultimate effect on crude oil prices more so than draws and builds. So draws and builds are like, it's always versus an expectation. So today's number was worse than expected, right? But the refinery utilization was a surprise to the demand side. So there'll be an initial move. And then I hate to say it again because I'm saying it about myself again. The smarter guys will look at it and go, yeah, but refinery utilization is strong. So demand is probably stronger than we expected. So that balances out the actual headline number and basically says that, well, demand is still there. Now, the thing that's pressuring crude oil now, there's two things, is slowing of Chinese demand and this Iranian nuclear deal that potentially is going to bring another 800,000 barrels to the market. Now, I haven't seen any Iranian news today, so I'm not sure if it's applicable for today. But that would be my take on EIA today, is watch refinery utilization and its trajectory for a representation of what actual U.S. demand on the ground is.
All right. Well, there you go. Anything else you want to say before we wrap it up? Because I know you don't have much time.
No, I'm good. See you guys tomorrow. Unless anybody's got a question for me, I'll look forward to talking to you guys tomorrow.
Okay. Well, then let's just plan on, if you have questions, let's bring them up tomorrow for Bob. Again, a triple dose of Bob this week. And thank you for spending this time with us, Bob.
Good to be here, guys. Good to see you all.
Bye.
Take care.
Hold on, everyone. There we go. Disappearing Big Mike, reappearing Little Mike. All right. Just wanted to get that take for everybody. Little extra bit of Bob. William, please come back to stock again. I don't want to do individual stocks in this segment, okay? So please come back to that because we got a lot to go over. But it looks like a lot of stuff got juiced in the Chinese market. Looks like there was some massive intervention in that because you have stuff like oh boy, I just blanked out. The Golden Dragon China Index, which Wavy brought up here, closes 33% higher. This is just the kind of insane stuff you do get. So, I'll look at China stuff if you want in the next segment. But thank you for being here. Hi, Dave. Yeah, I put on it's tie-dye Wednesday with my disappearing arms. See my disappearing arms? Don't wear a tie-dye with green on it in front of a green screen. Jake, tech loves rate hikes. Let's see. What else do we have? Recession is confirmed. Thanks, Rich. Yep. Yeah, we're going to go into a recession, and I think it could be a major one. Tesla forced recession likelihood not particularly elevated in next year Powell press conference. Yeah. Well, Powell doesn't agree with Rich. I agree with Rich. It's going to be a mess. But this is what you get. This is why you just got to trade the price action and not what you think, even though we were expecting the rally. And again, I don't have a sell signal. I don't know how long this will continue. Okay, we went up to 1361. We paused earlier. This was a fantastic day in the S&P. Pausing at that first level, you see, let me move this out of the way. Pausing at that first harmonic, pulling back right, and this is where I always watch, don't panic out of things. Again, below the 1 hour rotation zone, snapping back. That's why the close is the most important. You had the initial gut reaction sell off, and then the presser, which I said, watch the presser, because that's going to be, and a lot of times the first moves are the fake out moves. Remember that. The first moves in on Fed days are the fake out moves. So let me switch cameras here, actually. So which is exactly what we got. If you look at here, the shorter term, first move, here's, all right, here's the 1 o'clock, boom, boom. Here's the presser, boom. So, and you see then getting through our 4361 harmonic. So we're just going to have to update this to this high right now. And see, it's not even a long-term thing, but look at this. I mean, just check this out. Let me bring back up my little key areas. So now we have all this cluster up here, 4398, 4400, 4405, and declining 50. So on a continued rally tomorrow, or even through Friday, that's what I'm targeting. If we pull back and then we push higher, this is the area I'm targeting. So keep that in mind. Now, if we get a close above this 62.5, then I'll still go for potentially higher prices. And the next level will be about 44.63. So we could still rally back. Let's just check on the weekly. See, we could even hit that 44.63 and then still close within the weekly rotation zone. Is there more room to run? Sure. And as long as you have this negative gamma mode, and I tend to agree with Bob, some people are going to wake up and go, what the is going on? And we could get some selling pressure, but whether it holds on the pullback, I mean, it doesn't shift back to bearish mode at this level. For the short term bearish, again, long term is still in bearish mode. Nothing has changed, but it doesn't shift back to short term bearish mode, at least at this level, unless we get a massive sell signal until 42.18. So what should we be watching? The first thing I'm just going to be watching is this 1 hour rotation zone going in the overnight session. And I'm going to bump up this level to about 43.28. Then on a pullback below there, I'm going to about 4,300, 43.08. And then below there, I'd be back to about 42.80. So that's what I'm watching on any pullbacks. And I already went through the next target essentially is this 4,400. You can do shorter term targets, but we might look at that tomorrow morning with some overnight price action. But that's where we sit. Let's see what else we have. What else? Not only are we going to screw you with inflation on energy, food, we'll also make it more expensive to buy cars and houses. Also, we're going to raise those credit card payments. Give back all the money we gave you free the last 2 years. Yeah, this won't be a good recession. Everything is, it's going to get very painful for a lot of people out there. Okay. And I think, again, a bunch of people I saw is, again, buy the dips. It's the worst is over. Worst is over. We're going in all new time highs in stocks. Blah, blah, blah. We're fully in the market. Well, you know what? When we roll over again and they're fully in the market bleeds out, it's going to get painful on all fronts for a lot of people. I don't think there's many areas to hide right now. Let's see. I didn't even look, but we'll check ARC in the next one. Let's glance. I'll get to that crude again, double bottom, potential double bottom. Here we got to the even above the trend line today in the NASDAQ. Again, this was just a feeding frenzy this afternoon. So here's your next level. I just bumped this up. I dragged it back actually. My next level was this 13,982 to 13, to essentially 14,000. And then the next target now is a 14,100. 14,100 on a pullback. Again, I'm watching the 1 hour rotation zone. I'm going to keep an eye on about 13,833. And then below that, about 13,729 for my key pullback overnight levels. Again, 14,100. Our level before it would tip right now as of where price stands, 13,350 would tip it back to short-term bearish mode. And again, if you're in this, you got to just trail stop. That's all I can tell you. We don't have a sell signal now. You can see how overbought it's getting, but does that mean it has to stop? No, it can definitely pause, but this is where I like to trail, especially if we start rolling over below during regular market sessions below this 12.5% level. Let's see what else. We have the Dow, which we had our double target still. We talked about that. Look, the first target, 33,815. Tried to get above it, rotated back down. Coming back to the prior key area right here is 33,300, and now stopping end of day 34,036. At this next target area. So same thing here. I'm watching the 1 hour rotation zone. I got to bump this up now into the close, but roughly you can watch about 33,870, and then I'll key off of about 33,700 for pullback levels overnight. The next targets aren't changing, especially this 34,256 level, not changing at all because we have didn't mean to move that. We have the 50-day exponential right there. Then we're at 34,390, then 34,637. There is still a bit of a clear path move in here that is now closing into. So I'd really focus on this 34,390 if we get above the 50-day. Russell back above that 2020 level, but still in this major just consolidation pattern. There's really nothing going on besides these short-term rallies. And if you look at the longer-term Russell, it's got its weekly rotation zone. So next major area to watch is about 2082 if it keeps going. Crude, let's get to that because what did I do here? There we go. There's your weekly. I know. Here's your daily. We have this potential double bottom, but in order for confirm and I to get again short-term bullish, get 99.22 is the point there. It is slightly lower probability since this is against that rotation zone right there, and you're running into possibly the first cross. I saw a comment here. Oil will touch the weekly 20 MA, and again, remember my longer-term pullback zone was even potentially back to this 88 level, which we have a major cluster down there, and that's my 20 EMA level. So if this double does not trigger, we roll over again, then that's my really key area, and I'm looking to start trading crude around a core position back in here. Again, like silver and gold. I saw another comment, silver. Again, this was there were some nice triggers on silver this afternoon. Silver, this is technically was not a double though. It went too low. Now, that being said, you are into a clear path move with a potential return to this 2572, but this was a 4-hour %B buy signal right here. So there was a buy signal, but not a double trigger. So that's why you don't see the double targets on there anymore. Gold also had a 4-hour buy signal coming off the second target on that head and shoulders pattern. So we had the metals, which still inflation is going to run hot. Metals starting to reverse after that key sell-off area. What else do we have? What else? SPY and QQQ triggered double bottoms. I was actually looking These wouldn't be doubles. I don't think. Even with the conservative. Yeah, it did. It did. Sorry, I am correct from the conservative side, not from the aggressive side. Maybe that does, but I do the conservative side. Again, on a continued rally, you're back to the spiders with the 50. Sorry, I was watching the futures all day. 50 would be the target for 4440. And on the Qs, and I'm covering these because they follow the market indices instead of the stocks thing. Let's see where we sit with this. First, I got to move that to a reverse harmonic. Let me see with the conservative if this counts. Yes, it does. So on the Qs, your next target are 344 and 348. Thank you for pointing that out. Let's check that custom index. Remember, I said focus on growth and mega caps on the rally, and we've had a bounce back in some growth and mega caps, which you can see here with the ratios we follow. You can see, look at this, back to these area, and this is actually could trigger a little double bottom here. So could it continue higher? Easily, we could see still, even through the rest of this week, stuff going into growth versus value. And that mega cap, that's the mega cap ratio. Looks like it's also triggering a little double on the ratios. And so there we go with that. And it does work. So you could see still, and just the MGK. MGK, by the way, I don't think this worked. I forgot to look at this earlier. And it does work. So just with MGK, because this is not a triple bottom. Why? Because this is the move it's reversing, and your first and second targets are within this move. So could you still see inflows into the mega caps? Yes, you could. And again, these are great ways I love to play it if you weren't looking at individual stocks. So, what else? Let's see. I'm just looking to see if there's Mike Silver was valid on the micros. It's still tradable since it's valid on the other contract. You can still trade. And see, Silver doesn't. I just wouldn't use those targets. Okay. And again, I watch the targets on the main contracts or the minis, but not the micros because the micros can get whipped around a little more. So for Silver, if you're watching this, if you're watching Silver, you've got a clear path move. I'd be really targeting a potential return to about 25.70, and you could dial it down on here with the 1 hour. So raising stops, remember, we have let me go over this again. You have this clear path move. So on the 4 hour. So how do we then manage it? Look, we go in here. So, a minor area to raise a stop would be this 25.30. Next area, 25.42. All right. Then the next area, you're getting in on that 25.65, 25.70 area. So that's how I'd use that to raise stops. And if you wanted to take something off, the key area I'd focus on a little area to take something off would be this 25.45, 25.44. Why would I focus on that? Let me bump this down. It's this little prior hitch right in there. That's going to be a little key area that I would be watching on the next run up. And you can also do your harmonic projections. This is a great way to do the reverse. So I probably looked at about closer to 25.40. 25.40, and you see that's how we do the reverse harmonics. This is the pause area. So you're coming back in time, and you see this is what. So if you wanted to take something off or more aggressively raise a stop, 25.40, and then I look. It just depends your time frame and duration. And then above there, your breakdown area that triggered the head and shoulders. Then above there, that's just where it depends on your your trade duration and how long above that, then you'd be targeting again this 26, 25 area. So it all depends, and that's why I can't give specific trading advice because everybody could be trading it differently. Let's see what else. After today's rally, what are your probabilities of the lows that are in? It hasn't really. You mean for the year? What's your time frame? Again, everything's time frame dependent. I was going to ask that early wave, but I didn't want to take up Bob's time. Thanks for throwing it out there. S&P 3,800, NASDAQ 12K. Those are next targets before recover all-time highs. Well, there's yes for the years. What's my probabilities? The probabilities are only about 12% that have the lows in for the year. So would I be going with that the lows are in for the year? Nope. But you can have these short-term moves within. Let's take a look at the big retracement levels. Here's your NASDAQ. Where's the top? Right here. Okay? Could you easily retrace 50% of this move? Yeah. But that's only 50% of this down move. Remember, these aren't unexpected. So even if you retrace 62.5%, this is the longer term rollover zone again. If it did get up here, and we went way oversold, you get some divergences down here, and now we're getting that rally off. And now it's going to see I really got to see what happens with the option market too after Friday, because if you start it's going to get real interesting with what the negative positive gamma flip is for next month. So that's what I'm stating. So yeah, you could see a rally up here, but that doesn't take you to highs in the NASDAQ, just in case you got up here. Now the probabilities would drastically shift if we got a close on a weekly close above 15,337. You could see the probabilities start drastically shifting, but that's a long way off. So I'm saying if you're long and you want to stick with this, I don't have a sell signal yet. That's why we trail out, especially with a final position. You trail out. You're not trying to buy the exact low, sell the high. You're trying to take the chunk out of the middle, and you're trying to take the biggest chunk out of the middle you can. So for the S&P, 45, 45, still a long way off before that even shifts its probabilities. All right, so that's where we sit. And again, I'm going to keep reiterating this. Why I got to trade with the short-term trend right now and trail out is we're still in negative gamma mode. So if the rally continues, it feeds on itself. Now, if we start getting acceleration momentum to the downside, it'll hit a stop, and then I'll watch to establish new positions in the lower direction. Because again, you can go back down again just as equally as fast as you went up in this environment, especially here, because look at this on the 4-hour S&P. This is an advanced clear path move below 4307. So you start dropping below 4307, you're an advanced clear path move on the 4-hour. Could it unravel quickly? Yes, it could again, but I have no signal for that. So I got to still trade with the bullish case. Now, could we consolidate? Like tomorrow's Thursday, options expiration is Friday. Could we consolidate tomorrow? Could we pull back a bit? Sure, you could easily pull back even to 4,300. But that's where you manage your stops and you trail out. Rip your face off rally is still a feature of correcting markets. Yes. There you get some of the biggest rallies in corrections against bear markets. Remember, the NASDAQ did trigger officially a bear market. Now, what's so ironic is a lot of times when you have those trigger signals, you get these massive rallies the other way. And remember, we talked about this we've talked about this a number of times with, let me just get to that monthly in case anybody's new here. I mean, look at some of these rallies this is monthly chart. Here was your top. But look at some of these rallies. This is a big rally over, you had a big up month, a pausing month, another big up month, and then you just dropped like a rock. So you take a look at here, because there's so many few people who have traded through this. And look at this. Just look at that. Where did it go back to? Initial decline. Here's the monthly chart. 50 to 62.5. Hit it once. Sold off. Came back up. Couldn't get a close above it. Poked above it, then rotating back down. And then boom. Then you get another little pause. And then boom. Another 2-month rally. Boom. And then you're finally starting to put in a longer term bottom. But this is what crushes people, because everybody says the worst is over. We're going back to highs. And then sorry for the sound effects. That's a technical trading sound effect on the way down. I just want you to remember that and don't get too caught up in stuff, because it can, even here. All right, 2007 into 8. Look at where we rallied back to. And then, worst is over. Worst is over. So that's why you got to trade. You can get these great massive rallies in the short term. Okay? So, oh, I took the sound effects I don't watch Jim Cramer. I can't stand his show. I haven't seen Jim Cramer on TV since probably about 2006. So there's your little bit. And again, can stuff change? Could a long-term system? I'm just going to switch back over here. Could a long-term system be in flip? Yeah, but until it does, I'll trade the short-term bullish, long-term bearish. You trade with the information you have, which is why we're not trying to buy every low, sell every high. We're trying to take the probabilities out. The probabilities. And don't get caught up and I'm not going to analyze Tesla in here, but all right, we got a couple day rip your face off rally in Tesla. Does that mean it's going to all-time highs? No. Probabilities are still for another rollover there. Why did I bring that up? Because so many people, the lows are in. The lows are in. Back to 1,300. All right. All right. Probabilities don't say that. But if that's what you think, you trade that way and we'll see. But I'd recommend trailing a stop. That's all I can recommend. William, I'm going to wrap this one up. And in 10 minutes, you come back and we'll look at Baba. So, Kramer would have used the flatulent button. I don't even. Should I get sound effect buttons then? Boy, that would be horrible. But you were right. This malware must prove itself before anybody loads up on long-term plays. Again, you can play, I said, watch growth, watch mega caps if we get that rally on. And you can take that and you could have played those. And you can still be in them. And all I'm telling you is know where your stop level is. And this is not the kind of thing that you just walk away for months. There's going to be a time when a long-term bottom's put in, and that's where you walk away for months. So is this that time where you just put on positions and walk away for months? Not in my book. If it's in somebody else's book, then fantastic. But, I've been around since 92. So I've seen a lot of different market types. been involved in a lot of different market types. All right, with that, I'm going to wrap this up, take a quick break, then I'll come back and we'll look at some stocks if anybody wants to join me. I want to load up on calls just like 2020 and just walk away for months. That's again, if that's your prerogative, Wavy. It's not my prerogative. So I mean, yeah, there'll be a time for that. There was a time for that at the end of the .com bust. There was a time of that after, we hit the lows after the 2007 2008 sell off. But the time for it is from my systems and my probabilities and everything I follow is not now. Go back though. How long did I talked about at the end of last week and over the weekend? We're expecting a rally. Have we got a rally? But everybody's now, well, we got the rally. The lows must be in. No. So I'm leaving it with that. By the way, if you're new here and you found this content useful, please hit the like button and ring the bell. By the way, Bob will be back on tomorrow, so get your questions prepped for tomorrow. And longer term viewers, please do come back and hit that like button and leave some comments. And I will talk to everybody in the next stream. Countdown starts in 10 minutes, live in 15. Bye for now.